Hi, Warriors. How's everyone doing today? Mike, hi, Kman, Paul, George. Okay, so very critical level. Hi, Kurt and TLT. So here's a 4-hour look at tag this line, which is a wedge. Yeah, but tomorrow is a big day. So I know the dollar's turning, but so here we are. We had this wedge and then the overthrow and then back inside. False breakout, tried to break out. Now we're back here. I think this line is about 61.8 back. So this is not only a big level for the bonds, it's a big level for everything if the bonds fail from here. Okay, I'm my narrative is that it holds. So we'll see tomorrow what kind of numbers come in. Blake made a great call with S&Ps coming off yesterday. And so if the bonds fail, the alternate scenarios are, disastrous after two lousy auctions. First level would be 86, but this is what haunts me. A third drive under 80. I saw someone label that down here as a 5. And, you know, that would definitely put pressure on everything. Finally seeing a little pressure in Apple. One of the things that keeps me constructive about the market is Amazon, because this pattern, what's interesting about Amazon is, these were the highs, right? Last in 21, going into 22, right in here. And it took a lot more, the S&Ps, that was 4,800, for Amazon to finally take out the highs and make a new high. And when the tape was strong, before I left for a break, Amazon was under pressure, even though the market was rallying. But this is what I'm waiting for, is I'd like to see one more move up towards this 190 level for a 3. Okay, here's 1, here's 2, and that would be 3. So I heard a comment that the only Magnificent 7 stock that's still acting magnificently is NVIDIA. Okay, and that's true. It's going to be down a little bit today. But really, the key to me is what happens in TLT. Also, the 10-year got to almost 78.6 back. And 78.6 is like 474. I think that's what it says there. And the high was 63. Maybe it's 64. It's 64. So we almost got 78.6 back. What makes me think that might be it, despite maybe some spiking news tomorrow, is this was 78.6 back from this. So I remember a gal that we used to work with, Nicola Duke, said that a lot of different instruments have tendencies for fib retracement. So I'm thinking that maybe 78.6 is something that there's a rhythm within bonds in the 10-year yield. So anyway, just take a look at this, and this is the ball game.
Yeah,
So
Dale, I think that's going to be a lot with having to do with today's data. I mean, we got some pretty big data points coming in, today and tomorrow with we have preliminary GDP today, weekly
okay,
unemployment claims here in the US. And then obviously tomorrow's PCE,
right.
all that data, I mean, if all of it comes in, just call it a more disappointing, actually disappointing PCE would be more it'd be supportive of
Hot.
equities, but yeah, but well, I guess how do you what do you classify as disappointing? But let's say it's less hot,
Yeah.
then maybe the 78% retracement is what caps it. But the flip side is if the data comes in strong today and tomorrow and hot or strong, maybe yields continue to rally too.
Yeah. We're at this, I know we say it a lot in our business, critical, but
Yeah, it's
these
always
level,
critical.
yeah, but these levels do look critical to me. I
I
just
agree.
want to show the when we get a top, and I'm still in the camp that we haven't. This is pretty disturbing, and even the money center banks. And this is why the bonds have to rally because you look at this and look at how much it's given back. It's almost back at the April lows. These are regional banks.
I was looking at that yesterday, matter of fact. Yeah, great that you're pointing this out. I mean, it's a little stress on the banks, right?
Yeah, so I mean, they need some relief from rates, right? They're holding losers down 50%, whatever. But even the weekly looks like it was just an ABC back to the breakdown. And if we start taking out these levels, and the bears, the longer term bears are saying that what's going to bring on the recession may not just be economic weakness, but could be some kind of financial accident. So you have to keep an eye on it. And even the blue chip banks, if you look at the XLF, I'll try and find it. That too looks like it might be done. So, keep an eye on the banks, guys. It's a very important sector. It's been leading the way, like Goldman since the beginning of last year. You know, Here's
Yeah.
all of 2024. The banks have been leading, so you have to pay attention to what the banks are doing. Goldman was a standout. Uh, XLI, where's that XLF? All right. Anyway,
Yeah. I
uh,
mean, if you can, you just type it into it's
yeah,
I mean, we made a higher high, but we're
there it
back
is.
below the 50 DMA. There we
There.
go.
Okay. So that looks like a two drive up there, and just cleaned out the bears from late 21. So this too, kind of like Amazon, just made new highs and it's
You, you,
diverged.
Hey
Yeah,
Dale, after you're done talking,
go ahead. I'm done.
there's something else I want to talk about too that did the exact same thing.
Go ahead.
Pull
I'm
up
just,
type in the semiconductor index.
oh, I
Uh,
got it here. Yeah,
I,
the
I just
semi.
I just talked about it last night on the trade-off, and yesterday I saw a tweet from Zero Hedge, and Zero Hedge said the biggest the sector most widely held by hedge fund managers is semiconductors, right?
Okay.
And
Yeah.
so and the semiconductor index hit a brand new high, but it was the 161% extension. It like the last peak came really close. This week's move hit the 161%
Huh,
extension and reversed. And
here it
so
is.
it's like that unfinished business, just like you're just showing there with the XLF, same type of thing.
Yeah, these are weeklies, so to see what Blake's probably talking about, go to a 4 hour. Okay. Yeah. I mean, this is still a lot of mo, okay, up here. I know it's diverging. So here's a lesson, guys. It works once in a while, but the fact that you're diverging at 80 in with the high being over 80 back here lowers the probability of a top because it's not 70. It's still a lot of momentum, which says, you might have the look on the chart, but the mo should give you caution to try and top pick it until we get a new high with the RSI under 70, which is now what I'll be looking for if it happens. So I'm done, bro.
Well,
Curious to see what you're thinking with the currencies here. I was waiting to sell the yen back above 58 too and never got there. And I'm wondering if I missed the boat here.
Well, let's talk to Kman about that. But I want to say that the euro before we do this, um, the euro really found some pretty key support in my opinion. And this is one thing, just looking at the euro that I think we have to be really respectful of is the fact that it's holding, dips. And
I like that.
Kman, well, let's bring Kman in. He said it yesterday.
Morning.
Hey, good morning. You said it yesterday. U.S. dollar is probably going to firm up. It's corporate month end. We did. We saw the euro sell off. We saw the dollar really strengthen, which for me, I was appreciative of that because it gave me an opportunity to get out of a lot of my dollar, well, actually all of my dollar longs yesterday. But I also reversed because we are coming into month end and we're supposed to see some dollar selling going into month end. So what do you make of like the FX moves over the last couple of days? They've been following your script, right?
It has, but the issue with the month-end flows is that they are dependent on equity markets for the FX neutral funds. And since the equity markets have come down quite a bit, those dollar sales should be reduced. Now, I still think there's some leftovers to do, and we have tagged decent levels on a couple of the currencies. If you look at Euro, dollar, Aussie, Kiwi, Cable, you name them, and even the dollar Swiss. There's been some decent levels tagged. Even the dollar yen, where I said yesterday around 157.65, 60.75, I had this trend line. That's where it stopped as well. So yeah, there could still be some stuff going on, but we will see. Today, I think the opening of the U.S. markets and how it behaves, especially the S&P around 52, 35, 40, may be important for the hours to follow. And then we'll see what happens tomorrow, really in month end, right? The real month end day. So we'll see what happens once it comes up, and we'll get there. But yeah, I mean, the levels so far have been respected.
Yeah, and Arnis made a good comment that the euro dollar bounced off the 200 DMA this morning. Yeah, the 200 DMA and the 50 DMA is I mean, you can see how they're just kind of wound up right here. I actually had orders into to buy more euro at 107.85 and 5/10 of a pip, and I missed it. My orders got missed overnight by just a few pips, but yeah, we're definitely finding a lot of support down here, and month end is going to play a factor into everything. But one of the big movers overnight, and we should talk about it, is the Swiss franc. I mean, the Swiss franc absolutely went crazy, and it
Mhm.
sounds like, based on Jordan's comments that he made, he's getting a little concerned about the weakness of the Swiss franc. What do you make of his comments overnight?
Well, that's what I've been saying already a couple of times. Will Swiss franc can weaken until Jordan comes out of the woodwork and says that it's enough. This looks like a first warning shot, but it did take the FX currency sales rhetoric back up. So that spooked the markets, and I would say especially on stuff. Well, dollar Swiss is lower, of course. The dollar Swiss is going to follow. But if you look at all the Swiss crosses, they have corrected quite a bit, right? We are back in on an important level or close to important levels on the Euro Swiss, Sterling Swiss, you name it. So yeah, that was one that I was waiting for. Um, Secondly, the risk of driven by those lower equities has played a role for sure as well. And the positioning, I think the long-term market still must be holding quite a bit of short Swiss francs and even the Swiss yen, I would say. And yeah, if Jordan calls a stop to it, that would be something, and we need to respect it. Also, there's this famous 91 and a half, 60 on the dollar Swiss. It's a big level as well, and that we banged our head a couple of times against it, and now we're shying away from it. So yeah, to be monitored. And but we still have to see how serious that was, and let this month then go by, and then see what happens at the start of June if the investors or the speculators take up the baton again. We did have one decent number out of Switzerland though this morning, and I know not a lot of people are paying too much attention to the trade balance, because the trade balance itself was not a big number, but it's the activity around the trade balance which saw both exports and imports rise. So that means the activity levels are going up, and that was what the Swiss corporates were complaining about when the Swiss franc was too strong. So now that could mean that this, or at least the bulk of this move since the start of 2024, is done. 97.70 or so is the 23.6 of the 2024 move in the Euro Swiss. I think that's going to be an important level to monitor.
Well, Kman, I'm going to just go back to December of last year, and we discussed in December, this is going to be the biggest trade of 2024 for us, and I'm happy to say that many of us in the ForexAnalytix community capitalized on a lot of that, and especially the early months of this year. It's been a hell of a ride. Now, the question is, moving into the remainder of 2024, are we going to actually eventually see a break above, this would be, in the dollar Swiss, it'd be, above 92.50. And then obviously in the Euro Swiss, it'd be above parity. I don't think we're anywhere close to that at the moment, but I think that, moving forward into the rest of 2024, it's going to be something like this, that we're going to be, either looking to play for a major breakout or breakdown in the Swiss franc, or, the other way around. Maybe we revisit these levels again, or maybe these levels. But I think that, that as you just pointed out, the bulk of the move, maybe this year, has been done, and it's been a hell of a ride. I'm happy to have jumped on that bandwagon with you this year.
Yeah, it's been a good move, and it's been, I'm not going to say an easy move, but the entries were relatively clear. We had this big acceleration towards the end of last year in the Swiss franc, and everybody was bailing out of everything. But at the same time, the signal that the market missed, and that I brought up several times, was that the S&P stopped selling foreign currencies like 2-3 weeks or 4 weeks before. So that was clearly an end of year move. Yeah, we played that one well. That's always nice to have multi-month positions which turn out to be good. But as you say, I mean, the what's coming is to be seen, to be decided. And
it is.
Yeah, you can never call the complete end of a move, but in currencies that are, how shall I say, closely monitored by their central bank and even directed by their central bank, some of those moves can all of a sudden become very clear. So now we need to wait what the next decision is going to be.
And Patrick says, flight to safety on Swiss franc. That's, I believe, one of the risks where we currently sit. Where we currently sit in equities. I mean, equities are at, I would consider, very elevated levels at this time. And so as a result, a pullback in equities, whether it's US equities, or you take a look at global equities, that you have the Hang Seng that's got a head and shoulder pattern, playing. Nifty 50 out of India, false breakout. We've talked about that. FTSE looks like we're going to, we got a big head and shoulder pattern, and we're going to probably see continued selling. DAX, false breakout here, and a move back down to channel support. You start to see global equities move lower. The Swiss franc might be in demand near term, just, as a side dish, if you will, in the market. So it's something definitely worth monitoring. Hey, a couple other things we should really discuss, for today, Kman, in particular. We do have data coming out. Tonight we have Chinese PMIs, and we're also going to get some Tokyo CPI data. We should probably talk a little bit about the yen. We've seen this big breakout in Japanese 10-year, JGB yields. They've really ripped higher along with global yields. But it looks like the dollar yen, I was hoping for a move to 158.50. I'm wondering if we got stopped shy of that at the 127% extension, which would have been right here. And that could still fulfill a Gartley pattern reversal. But how are you feeling about the yen going into Tokyo CPI tonight?
Yeah, data are mixed over there, but the thing is that now, and I've seen some people now starting to bring rate expectations forward for the Bank of Japan, and I've already been saying I'm not even going to rule out June because they've been talking about the yen level for that reason. So together with risk off that we had a risk off move overnight, or well, yesterday in the US time zone. It's been accentuated in the Asian time zone, and together with those calls and the Bank of Japan remaining mum about the 10-year JGB yields moving above 1%, that's caused a bit of a setback in all things yen, and yeah, it's I do have myself, and it's been walked through a couple of times, but I do have a 157.65.75 in there as a trend line coming from 2015 actually, and yesterday I said this could be a bit of a level, and we stopped there. I think a little bit. Coincidental, I'm going to say, but yeah, all the yen pairs have corrected since. But again, we are still month end, and you look at the Nikkei moves, you look at the JGB moves. It's all part and parcel of month end, in my opinion. This move that we are seeing now, I would really want to see again where we end the month.
Yeah, yeah. Again, I think as you just said, month end's going to be real tricky here in the markets. I do want to point out something with the S&Ps, and Dale, just let me go back to you, Dale, real quick on the on SOX on the semiconductor index, because I did talk about it last night on the trade-off show. Chris Weston wasn't there, but I was with Quasar, they're one of their Spanish analysts. Where in the hell is my semiconductor index? It is around here somewhere. I just got to find it.
Like
There it
me.
is. Yeah, I kind of know where it's at, but so this is the longer term semiconductor index, and you can see the last time we came real close to the 161% extension, the next move, which was the higher move this last week, finally finished that unfinished business. Relative strength was divergent, and and then we've since seen a reversal, and obviously this, what happens here the next couple of days could end up being a false breakout and take us lower again. And this is one of the bigger holdings of hedge funds globally. Not just with NVIDIA, but SMCI and AMD and blah, 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 you name it, they're in it. So watch the semiconductor index here, and, looking at equities, the thing that scared me
Blake,
I
think you were going to ask me to comment on it, but let's see, you have two drives, you have divergence, pullback is in order, but I would wait for drive 3 to top pick it. So you have two there. Pull back and then one more shot up, maybe into July. And, you'll have an even weaker RSI pattern. It doesn't always take 3, Blake, but when Mo is strong, usually does for that momentum to diminish. So I think you have a trade to the short side. I think this is just drive 2 though, and there'll be one more.
So let me give you one of my biggest rules of rules. Never buy 161% extension. You only fade it if you're going to do anything. So it's the golden fib, and it's the golden Fibonacci ratio for a reason. So the 161% extension, you'll never catch me buying into it. You're only going to see me sell into it if I'm going to trade counter trend. Period. End of story. You know, and that's it. One drive, 10 drives, I don't give a shit. I don't, you know, it's like I'm not buying it into that, but that doesn't necessarily mean you need to
Well,
fade it, but
I
that,
wasn't saying buy it, but I'm
but
just saying it's incomplete to me.
right, I hear what you're saying. I'm just saying that the 161% extension, will only take profits into or sell into, you know, no, or opposite if it's going the other direction. It's just a hard, fast rule that I follow. Doesn't mean it's always going to work. It's just something that I do. And it, you know, those are the things that, you know, you and I and all of us as traders, we have things that over decades that we've learned. One of them for me is never buy into that. You know, that's for me, but that doesn't mean that we can't do exactly what you're saying and do one more move lower and then a drive higher before
To finish it.
to
Yeah.
finish it off before rolling over. Because remember, this 161% extension, it is a range, it's a
Yeah, it's a
level,
mattress.
and they're
It's a
not
pillow.
exact. If it was an
Yeah.
exact science in the market, we would all be gazillionaires, but that's
playing
not what.
golf.
Yeah. Yeah, it's definitely a feel. So I see exactly what you're attempting to
But
do
it's
here.
good to be on top of this one because it is a big leader of the market, you know, because of Nvidia. But I
Yeah.
mean,
Oh yeah.
you know, you want to look at a semiconductor that looks a little different. Pull up Intel.
Oh yeah, for sure. It
Uh,
does look a lot different
and the
than
Dow
the rest of the market.
And the Dow has been obliterated. So I mean, we're almost back to 2022 lows in Intel.
Yeah, and speaking of which, I want to talk a little bit about this before we go into. I want to ask questions to Kman about the South African elections and what's happening with the ANC. But I do want to point out S&P. You know, the problem with the S&P that we have here. Let me zoom in. Let me fix that real quick. We closed back below yesterday. Finally, we closed back below that 52.85. So I'm going to be watching S&Ps really, really carefully around these levels because this is the 24% retracement. Now, the 50 DMA is at the 38% retracement. That's what makes this the 50 DMA extremely important over the course of the next couple of days.
Yeah.
You know, obviously with some U.S. economic data coming out, but Dale's exactly right. The Dow is definitely the weak sister, which is setting up or the weak link, if you will, which is also setting up a double top. Because if we actually break down, you gotta see what these extensions are, just so you guys can obviously know them. That's a double top setup, not a double top yet, because the double top setup is a breakdown below support, which happens to be also the previous breakout point. So you can see that the target in the Dow is
34.
all the way down here at 34,000. Now, if you think about that, everybody just had their 40,000 caps on.
Yeah.
So, if the Dow finishes off this chart pattern over the course of the next couple of weeks, we're talking about a 15% decline from the highs. That's your garden variety, not a bear market, but we've seen a pretty aggressive sell-off. It's something that could definitely happen if everybody decides they want to sell at the end of May and go away.
So this is how I'm playing it. I'm looking for an S&P new high. You will. I don't believe you'll get a new high in the Dow. So it'll create a failing rally off this break. And that's going to be my preferred short since it's giving me the market message of being more vulnerable. S&P's, NASDAQ new highs, lower high in Dow. That's
one of the other things that I'm going to point out, and then I got to talk to Kman real quick. Look at the VIX. We actually made higher highs in volatility. Now we're coming off this morning, but higher highs, and we made a fresh low in VIX and then reversed. Usually that's a reversal pattern. Kman, real quick while I get set up for the data, what's your thoughts on South African elections? It looks like ANC is going to lose their majority for the first time in forever.
Yeah, that was expected, right? And we're looking at this 40-45% zone, and we are somewhere in the middle towards the bottom end of it. And so now it's going to depend. Well, I mean, the full results are not in yet. They can only come out like around, I think, until Saturday or so. But we have a pretty good idea. ANC should end up around somewhere rough, give and take 1%, 42%. And so that's coalition. So if they go in with the DA, that should be seen as perhaps temporary positive, but then we've already seen that the effect and the
Sorry,
data
guys, we're just getting
out,
data coming out right now.
jobless
So,
claims roughly where they were. GDP revised slightly lower.
Yeah, helps
yeah,
yields.
and that's
Corporate profits lower. Prices a tick lower than expected.
Takes a dollar
and you can see
down.
the dollars coming off as a result.
A
Yields are
little
coming
bit.
off a little bit. S&P likes that. Stocks like it
So far.
so far until stocks realize that, you know, oh wait, slower growth is not so good.
It'll like it for a while because the bonds, the pressure from the bond market will relent. So it'll like it for a while.
Yeah, but we are end of month as well. We just can't forget all of that. It's just so it could be a very mixed picture because I just want to come back 1 second on that. It was expected that there would be rebalancing out of stocks for the end of the month. So we will have to see what's going on. I mean, the stock market can like pick up a little bit, then go back down, and I really think we need to wait for the start of June to know exactly what the stock market could do, and then we could end up in your scenario, Dale. It's like a fresh high on the S&P and perhaps not on the Dow, and then whatever may follow from on the back of it, you know.
Yeah.
Because today and tomorrow and it's look at the S&P end of April. Just look at it. It's a near perfect overlay of what we are seeing today and yesterday.
Oh, yeah, we bottomed in late April, sold off
Yeah,
into
and then
late April.
and then it shot up again.
Okay. All right.
And
yeah,
Matthew just wrote in a live update on the South African elections, and yeah, that, you know, it's something you got to keep pretty close attention on. And by the way, you don't have a guest today, do you, Dale?
you know, oh, he is here. Dr. John
Hey.
Sinclair is here. Yeah.
Oh, he is. Okay.
He must have changed his handle because when I put it in, it didn't work. But John is here.
Oh,
Okay.
he is here. Okay, then I'm gonna let you take over real quick. But before I do that, you guys keep an eye on the South African elections, just because we are seeing a pretty big reversal in the rand, and we got to watch it, especially if you know, if the rand starts, you know, getting demolished going into this, you know, as they're counting up all the polling numbers. I do want to mention that, guys, if you haven't taken advantage of ForexAnalytix, remember, this is the last week that we will have price discounts. We only do it a couple of times a year. But if you take a semi-annual or an annual subscription, you're entered to win a $100,000 trader funding program assessment. Your chances of winning are really good, because I know historically, you know, when we have these pricing discounts, how many people take, you know, a semi-annual or annual subscription package, historically. So I know it's, you have a very high percentage chance of winning that drawing. So make sure you get involved. And it's the best time to get involved in ForexAnalytix and inside of our community. If you guys have not seen what our this is, you guys see all the tools all day long. We show you all the tools that you have here, all the analysis, the data flash, the live squawk feed. All these tools come with ForexAnalytix, but this is where the heartbeat of what we do is. You can see all the chatting and all the conversations that we have about everything that's going on, whether you're talking about, you know, earnings out of, you know, Kohl's, and, you know, how the stock is reacting, you know, when Kohl's earnings comes out, or you're dealing with the S&P and you're talking about what's going on in the Dow, or what's going on in, you know, the Nikkei. We have so many different rooms and side conversations. This is a community where it's probably one of the most active in the markets, and it's run by us. There's no selling, no religious talk, no political talk. Any of that happens, we just kick you out. So
God bless America and our two presidential candidates.
Stop it, Dale. All right. So
You
with
know
that being
what,
said,
Blake, with that
yeah.
being said, you know what says even more than that? Simon writes, join. He's been with us for a decade. So, you know, people don't stay with a service most for more than 6 months because they're always out there looking for the holy grail that doesn't exist. But, you know, people don't hang around for 10 years just because they like you to say hello. So, you know, we have lots of testimonials and we have people that have, you know, we've turned people's trading around.
Well,
So
that's
if
a
you're,
that's the thing is and I was talking to one of our Rick, who's been with me for literally 20 years. I met him 20 years ago and he's been in our community since then. And I was talking to him about our community just 2 days ago, and he's like, the problem with other chat rooms is everybody's trying to one up each other, and they're just running victory laps. Oh, I made this, I made that. We don't we post what we're trading, but it's more about helping one another, and that's a big different a big difference between what we do and what happens in our community versus what's happening everywhere else. Any other chat rooms, you're going to be sold something. People are trying to, you know, oh, I made this and I made that and I made this. No, we just post what we're doing. We post what trades we're taking, but I'm not going to run victory laps and say, oh, well, you're a dummy because you didn't get involved. No, it's just knowing what we're trading is the most important thing, and having a community and trying to help each other. Anyway, we can go into that in greater detail when we see you in the community. So with that, I'll let you guys go.
all right. So, Dr. John, thank you for sitting through our testimonial commercial.
Yeah, thanks. Sorry about that. All
That's
right.
okay. I'm going to let you give you some exposure to our community. Dr. John, welcome back. How are you, buddy?
Great, thanks, Dale. Appreciate you. Appreciate
Yeah,
everybody. Sounds like an awesome community. Just the right type, I think, for anybody who wants to have just that, a community. So that's exciting. Good job, guys.
and you know what, John? You know what's interesting? We bring in people outside of our business model, like you, to give you visibility to our community because we're not afraid of losing a subscriber if they find a better something that suits them better. And you know, I challenge all of my guests to try and find another company that lets others promote and you know, have this type of visibility with their own community. Usually you'd have to be like Steve McQueen and jump over a wired fence to get into someone else's community, don't you think?
Right. Right. Yeah, absolutely. I think it's a great thing. So yeah, and I'm really happy that you guys have me here. And
Yeah.
sorry for the Twitter thing. I'm kind of done with Twitter, Dale.
Okay, that's what happened. Because
Yeah,
all right, all
I'm
right,
done. I'm done. It's just
okay.
so exhausting. It's so exhausting.
It is. It is.
So many,
Yeah,
so many changes since Elon, took over. It's just like, where are we going? What's happening here?
yeah. Yeah. So okay. Do you miss it? As it I
No,
mean, I know you don't miss it. Are you involved in any other social media where
not
people could
really.
follow you?
Not right now. I mean, if anybody wants to check out my website, I mean, you can kind of check that out. I mean, I write a newsletter
Yeah.
still, so
Okay.
you can follow me there if you want, or just check, from time to time, if you have me on, like that type of thing. So, but
Okay.
the big thing that I've been looking at is, what do you think about? I didn't tune in a little bit earlier, but what are you thinking about these all-time highs? Does it feel frothy up here, or like, do you think this thing could keep going?
You know, I know some guys that have not been bearish for a long time that are extremely bearish,
That are
looking for
bearish now?
yeah, that are looking for a C wave down. Here, this is the most bearish
Yeah.
guy. Now to me this looks like drive two as well, but it sometimes you don't need three. But anyway, this guy's an Elliottician, and he's saying that this is ending a B and we're going to get a C.
It could be. Yeah, this could be an expanded flat here. So in other
Yeah,
words, what we got is, if you can see my screen, I've got
yeah,
this is a possible zigzag down, right? So you kind of have this A, B, C move, right? So it's
yeah.
very impulsive on the way down. And I think this probably sucked in a lot of bears, or at least got some,
April. Yeah,
And it was really like, so obviously this huge wave up here since October was just massive, right?
Right.
And so now like we're starting to get like, I mean, we're not really seeing a lot of these Fed heads coming out and saying like, yeah, we're going to cut rates. You know, the most of them are saying like, we might even still raise rates, right? So the market,
Yeah.
I think, is getting a little bit sketchy here. And if this
Yeah.
is an ABC, right? So you have this it's called an expanded flat. So it pushed above, it basically sucks in the longs over the last pivot.
Because it's an irregular.
Exactly. And then you see kind of that wave down. Of course, that wave C could be any size. If anything, symmetry is what you'd look at, which means all we would do is really ultimately just kind of test these recent lows. And if that's it, then we're going back up after that. You know what I mean? So
He's talking 3,500.
oh wow, that's huge. That's like you'd have to switch to like here. Let's go to a monthly time frame if I can here.
Yeah, 3,500, and then a rally into the election.
Oh wow, when's the election? Is it like November this year?
It's always in November. So a rally into the election, and you know why I think this is possible? Because of my sister. Okay, so here's my sister. She's got a nice 401k. She's done well. She's in the market. And she said, well, Dale, what I'm planning to do is to get out of the market in October and get back into the market after the election. And
go.
you know how, and if she's thinking that, you know how many people are thinking that.
I mean,
So how can they trip people up? Is by having a severe decline well before October. Okay. And then that, what did Tyson say? It's a good plan till you get punched in the face.
Right, exactly.
Right. So anyway, this is what he's looking for. I don't rule out maybe another push to 55, 5,600 if we get some benign data. And also, go ahead.
I got the monthly chart pulled up here, and this pattern, right? This little kind of like alligator type looking thing is what's called a bump and run. And so you can see here, this is all the way back from the Great Recession, right? And so here's COVID, right? And then this line keeps on going. And so what we've seen here is the bump, right? And so again, as long as it holds this line, I mean, I guess bullish, right? Until proven out. I mean, obviously a move back down to 4,500 would certainly affect some people, but as long as that line is held, then I guess the trend is in place. But if it breaks down, we could start to see an accelerated move back to that line, and so that's the bump and run move. So
and that's 3,500.
Yeah, and then that brings
like
that depending on when it happens. Let's say we go up a little bit here, we break down, and then boom, there you go, 3,500.
So okay.
Possible.
All right, so but I'm looking I'd like to see Amazon make one more high for a 3-driver, because it was acting pretty weak. I just realized you're interviewing me. You turned the tables on me, man.
But you're much more interesting to listen to. So.
Anyway, so so one more high in Amazon, and I'm going for it. I don't know what you see, but I think we're going to go back and fill that gap minimum. So
I mean, Amazon's just been such a tricky name now. So you've got these names that are vulnerable. Like there was just what is it, Strategas or whatever just came out this morning and said, there's still a 30% chance of a recession in 2024. And it's like, these type of companies like the Amazons, the people that are like selling stuff and delivering stuff and like, affected by inflation, they're going to have, potentially a little more issues if things do turn. But like, what about NVIDIA, right? Is this thing ever going to turn back? I mean, I know we're going to do a stock split soon.
Yeah. 1,300.
Yeah. I mean, very possible. I mean, we were talking about 1,000 last time we were here. There it is. Just gapped over it.
One more gap, John. So here's my lesson in gaps. The first gap that it left, that must have been earnings, was a breakaway gap from that formation. The second gap is a runaway gap.
Yep.
And the third gap will turn out to be
exhaustion gap.
Yeah. Okay. You know this.
Yeah. So yeah, so that'll be it. So that gets you to 1,300, and then
Yeah.
we're still hanging around 1,000, and then the split. How big is the split going to be? I'm sure everybody knows.
I don't
10
know.
to 1. 10 to 1. So back down to
Okay.
100 or
All
130.
right. Yeah,
130.
that'll draw some people in. Oh God, I could get in for 100. Yeah, and it'll go back to 1,000. So
This was a
anyway,
classic one. This was a classic one because if you guys remember, there was a series of stock splits that happened for a while there. Like this was like a year or so ago. And everyone had this was running up and running up and running up. And then Nvidia never really did anything. And then they did a stock split here. When was this? This was back in 2021. So a couple years ago. So they did a split, they ran up into it, and then the market pulled back. And so I think around that time, didn't Amazon do its split after the market pulled back? It was
oh
like
yeah. So
yeah.
everyone was trying to, give people lower price levels so they
Exactly.
would be,
Look, there
yeah,
it was. There it was right there. And it
yeah,
was when the market was pulling back. And it turned
yes,
out that split ended up being a pretty good dip buy for Amazon. So, but look at
it
it, you're right.
was.
You're right. We're right at these like crazy levels right now. So,
Yeah, all it did was get back to where it was. So, this could be also an irregular B up here with a
mm,
C to come. So
yeah,
anyway, that's my Khalid is going to buy Nvidia puts at 1250
there you go.
um, with Nasdaq at new highs. What do you think about the huge move we've had in commodities, specifically silver shares, gold miners?
Yeah, let's take a look there at that. That's been a really interesting one here too, right? Because that's like a big hedge against inflation, right? And so I mean, here's silver breaking out over some major levels,
Yeah,
and then gold has had some pretty
yeah.
epic weeks. Let's see what we got if we can get the chart up here.
So, I was reading some commentary from a trader friend of
Yeah,
mine,
look at that.
and yeah, and he was saying last week, besides the miners, we've had a big move in utilities.
hmm
We've
hmm
had a big move in staples. Basically, what he's saying is there's a big rotation into defensive sectors last week. Did you notice that?
Really, honestly, not. I've just been mostly paying attention to this Nasdaq stuff, but like that would not surprise me at all. Just to get a little bit more position. I mean, think about it. I mean, like really. I mean, as a trader, how long can we chase this thing, right? Like, I mean, even if I primarily focus on day trade action, but it's still
Right,
fractal into your
right.
daily charts and monthly charts. So I mean, that's fine. But when I look at this as a chart, like, do I really want to go long here? And same thing with everybody's got different philosophies on the whole thing, but it's just like when these things get so extended, it's just like, hey, take some profit, right? It's okay. Nobody went broke taking profits, right? And so unless you took more like losses along the way, right? But as long
Yeah,
as you're taking profits, right? I mean that's fine, right? So I mean, keep an eye on the sectors, make sure they're moving in your direction, make sure the setup is good. And really honestly, like Dale, that's kind of what I wanted to just chime in about today is just like kind of taking a step away from the charts and just talking a little bit about like the trader mentality. Oh, this is actually was like a
sure.
nice cup and handle pattern here too, by the way, just
Yeah,
on gold.
yeah. Okay.
Yeah.
Yeah. So here's my trader mentality right now. I'm scalping, I'm trading, but for like swing and intermediate term stuff, um, what I have is a shopping list
Yeah.
for if and when we
Yeah.
get a big swoosh to the downside, and miners are top on the list because a lot of them aren't even giving up gains, but I think there will be a pullback in miners because the majors like Barrick, like
hmm
Newmont, have not performed like the marginal producers, which when you get moves like this, they outperform.
Right.
But I will buy anything that if you drop on your foot, it hurts on a swoosh. So maybe we get a 50% pullback in GDX, back to 31 or so.
Right.
So uh, anyway, that's kind of my narrative, and my trader cap is, if there is a sell off, besides wanting to be, inputs and things like that. What is the opportunity? And the opportunity, I think, is in commodity related stocks.
I like it. I like it. Yeah, I mean, the only thing that I can really, offer here, for the session is just like, when we chase things, if we chase things that are breaking out and we miss the breakout and we're chasing it, it's a fear-based move, right? And I think it's important for traders to understand what they're doing and why. And so, but if you're in, I get this question all the time, and sometimes I ask myself, it's like, how can I stay in this trade longer? Right? Be courageous, but don't be reckless, right? Like, because that can blow things up really quickly, right? So that's the idea, is that have a system in place for following these things if you're in and they do break out, right? Don't be afraid that, to take profit if you met your guidelines, right? And if you got a little bit left that you can run along with, cool. But like your friend was saying there, it's like, there's no reason to run victory laps through these things, right? It's like, yeah, it's a personal, every trade is a personal thing, right? And so by taking that and trusting yourself and trusting your system and back testing it, it's really the best thing that a trader can do. And that's really just what I wanted to offer there today.
Well, I want you to mentor me. So I bought the miners on the day they turned, and that was the beginning of March. Okay. And, things started getting overbought and the dollar was rallying. So I went to the door and left a lot of chips on the table. Mm-hmm. Tell me how I could sit when I've been waiting for a trade for a couple of years and I could only sit for a couple of weeks instead of a couple of months.
That's such a long time frame, Dale, and it's like sometimes it's just like have your levels, right? So like, what is for which ticker do you want to look at in particular? And I'll show you a couple ideas.
FSM.
All right, FSM. All right, let's take a look. I mean, really, one of the big things and there's only so much we can do, right? I mean, if something flashes a big red candle for you that kind of scares you out of a position. So is this what you're talking about here, Dale?
Yeah. Yeah.
Okay. So the last 3 months, like you were in for a couple of weeks, but the darn thing kept going.
Yeah.
Okay. So, I mean, this is really it. You have to decide what your method is that's going to keep you in it, right? I mean, it looks really obvious after the fact, like all charts, right? Especially Elliott Wave. But like, right. One of the techniques that I use is just trailing by candle, right? And sometimes it can be brutal, right? Because like maybe you got here, right? Maybe you got to this level right here, and then this thing turns red and it takes you out. Well, is it more than you would have made if you got out halfway there? Sure. And that's where you have to have the discipline to be like, okay, what's my rule, right? And then you can go down to the shorter term timeframes, right? So if we just go back here to the weekly chart, was there a shakeout candle on this one? And if it wasn't bad,
that I even said, this could be the kind of move where you wait for a pullback that never comes.
Yeah, and it's okay. You just have to have the method. You have to have the method. You have to back test it, right? And you have to trust it, right? And so here, right? Yeah. So if you're involved here in April, right? Well, what candle is going to get you out of this thing? If you moved your stop here, well, you got more than halfway than the original candle, so that's okay. That guy tagged you out, and this one got a little bit lower, and then it got red, right? So where's the breaking point, right? And which is the level that's going to get you? So sometimes we look at stuff like, well, do we close below the last level?
Okay, right? You see that consolidation there? That sideways. Okay, so I trade the physical too, and silver at that first one peaked at 30. And pulled all the way back to 26. And I thought the shares would give back a lot more because they were underperforming for so long, but they didn't do anything but move sideways during that. That was a pretty big pullback from 30 to 26 in physical, but the shares didn't give it up.
Right, exactly. So one thing to look at, Dale, is like, all right, monthly chart's still green, right? So it's like, hey, the monthly chart's on my side, but that monthly chart could turn red and turn into a lot of suffering, right? So the real thing you can go is go shorter time frame, wait for a close below a level. So we never close below a level here to get going. And then you can do like add some bumper guards in here, right? So one of the ones we like to look at is the exponential, right? That moving average.
Okay.
ADMA,
All
right? Go to your
So-
ADMA. If as long as you stay above the ADMA, nice little Fibonacci number there too. As long as you're above that,
Look at that. Never violated it.
never violated.
Nice. Nice tool. You know what, John? You're a
Oh.
good coach. You're a good coach.
Hey, thanks, Dale. And so, like I said here, look, let's say this week, I mean, we got there's a couple days left, but if this week closed below that candle, that could be an exit. If it closed below the ADMA, maybe definitely a good exit. You see what happened down here? We closed below the ADMA and then it puked, right? And then, right? So just little things like that. If you can catch that move, you got to have a system. Now go back and go, okay, let's go back to the last breakout, right? Let's go back to the last here. All right. Well, if this was my breakout thing, right? This is nasty, right? So now it's like, yay, everything's going. I'm trailing by candle, and then douche. That week happens, but you get like some sort of like, earnings thing. So you got to pay attention to all that stuff. Is this stuff easy? No. But if you have a system, and if the system doesn't work for you that one time and you still made a little bit of money, and maybe you made more than if you were just keeping your fingers crossed, well, that's better than it was.
All right, John, show your website so that people that have heard you now and listen to the recording later, since you're not on X anymore, know how to reach out to you.
Here, let's go to positive. Here, I'll share it here in a second. Let's see, positivetrends.com.
And so, we'll keep you in the rotation. You just have to look at well, you'll have the dates. So you don't need X to remind you.
Right. Yeah, and you can always email me through the website or whatever here too. So positive trends, we're doing, like I said, we're doing a lot less on Twitter now, starting to focus on, maybe more coaching, a little more institutional type work, that type of thing. So you can always check us here. You can always hit that contact button to reach out if you have questions. Again, I still do a newsletter and a morning newsletter. A couple of things that if you want to get involved and get some ideas out there, but that's kind of what we got going on. So yeah.
All right. Well, John, it was great catching up with you.
Yeah, man. Have a great day. And my trading warrior brother.
Yeah. So Dr. John Sinclair, my trading warrior brother, everybody.
Appreciate you guys.
Check him out. As you could hear live, I asked him to help me. I'm going to look at, get a hold of him and maybe use that indicator to capitalize on my turning points instead of making the tough money and leaving the windfalls on the table.
Appreciate you guys. Have a great weekend.
You too, John. Thanks very much, buddy.
Bye.
So that's a wrap, everyone. Don't just count your pips, count your blessings. Take advantage of that sale. Surround yourself with Blake and traders that are better than you, that you could learn from. And, it's not only just better. How about even just not as good as you, but another pair of eyeballs that points you towards a market that you would not even be paying attention to. That's a big benefit that I get with the people I interact with during the market, is they see things I don't see, which points my eye into that direction, and then I see how it lines up with my work. And if it's compelling, I go. So, Laura, have a great day today. Sinatra, everybody. Don't just count your pips, count your blessings. We'll wrap up the week tomorrow. Dickie Matthews will be here. And the big number, trade it live here in F.A.C.E.